make your plan. Find the teams that are building that have a good runway. The winners of today, like we were just talking about on this conversation, may not be the winners of tomorrow. So allocate accordingly, and it's important to always save some bullets for that type of situation.
Welcome to the show, Drake on Digital. We've got the man himself on the channel today.
Dude, it's an honor to be here. I appreciate you having me on the show.
Thank you, Drake. And before we get into you, I just got to say it's a huge honor to have you on the show. Back before I had a channel in early 2021 when Binance Smart Chain was the rage and everyone was talking about BSC DeFi, I used to watch your videos religiously. So it's pretty unreal to now be able to interview you on my show.
Dude, that's awesome. That actually hits me in the heart. That's awesome. I love that. I remember the pancake swap days. That's
yeah,
good.
Those are
that, man.
Good days, very educational. I can't say I made money, too much money on them, but I learned a lot of things that helped me later in 2021. So for people who aren't familiar with you, why don't you give us a quick background on yourself, how you got into crypto and what you're doing now?
Yeah, so it was around 2019 when I first got into crypto, and I started the YouTube channel maybe a month or two after I got into cryptocurrency. But I first started into stocks, and stocks, they were like, this is great and all. And I was doing some research. I'd constantly add different tickers and try to do the fundamental analysis on it. But it really just didn't speak to me. I mean, there were some stocks that did well, and then others, it was just like, okay, well, this is awesome. Then they had this thing in cryptocurrency, and I was like, okay, this is cool as well, like a little decentralized thing. And I'm in real estate. I still am in real estate now, but there's a lot of major issues in the traditional way real estate is done, especially on the payment processing side. And I saw the major issues of centralization and the ability for these different banks to be able to look at you and say, hey, you're doing this type of business, or hey, you're doing this, this, and this. We would not like to do service with you. So you would be unable to accept payments. And seeing something that has a permissionless way of processing was what Bitcoin was looking to provide. And I looked at it and I was like, well, it's 10-minute transactions. This isn't going to work so well, but it's still interesting. I kind of like Bitcoin. And then they had something called Ethereum. And I was like, cool, I'll look into this. And I noticed Ethereum was faster processing times, but then I saw like issues with gas fees. And I was like, well, I'll still buy some ETH anyways. And I bought a little bit of Ethereum. Then we get into Binance Smart Chain and the yield farming days. This is where I got more in depth into it. This is after I did like the altcoins on Ethereum, because they had altcoins, and you probably remember some of those videos. I would do like little intro videos on altcoins, just kind of breaking them down, what they're doing and what they're looking to solve. And those were really like throwing darts at a wall. You figure out the narrative, figure out if someone would be willing to buy it. And it was almost like a greater fool's theory with a lot of these different altcoins. And it was a speculative trade. I mean, some of them did well, and then some of them didn't. At the end of the day, you wanted your winners to pay for the losers. But when yield farming, like once I got into that and it came on Binance Smart Chain, that's when it was like, okay, wait, I can mathematically calculate on the yields, or how to obtain these yields on these different platforms. So then it was something that wasn't as speculative. And of course, as time went on, different farming rules developed. And if you guys remember on the channel, I also went over those different rules, and I shared with you guys along my journey what I'm learning and what I've learned from each of these farms. So you guys can take that and learn from it yourselves. And then it went to Polygon, then it went to Avalanche, and each of these different trades, and it kind of evolved to where it is today. So that's a little bit about the journey of when I got started and how I got into crypto. And now I'm just kind of sharing as I go the experiences that I have. And that's what I wanted to do with the YouTube channel. I was already researching anyways, and I was already in all these different yield farms. So I was like, might as well press record and share what I learned.
Awesome. Great mentality. And yeah, for people who started in crypto or started on chain, I'd say in summer of 2021 or later, I think it's tough to appreciate just how insane those Binance Smart Chain days were, where you'd have farms that would launch and pump like 100x, within
Remember
24
Goose?
hours. What?
You remember Goose?
Goose. I distinctly remember Goose. Well, I remember Goose Finance because I was up majorly, and then all of a sudden I was not anymore.
That's
It
crazy.
was, I remember Ape, which I guess is kind of still around, Ape Swap. Pancake Swap, of course, was nice. That was about the only one I actually did well on. But it was just wild. And I think for a lot of people, it was a learning experience, right? Because, and I'm sure when the next wave comes, people that had that learning experience on AVAX or Phantom in the fall will get to use that knowledge. But sort of getting wrecked a few times on Binance Smart Chain taught me certain things to look out for.
Yeah.
Cool. And then that's awesome. And before we get into other stuff, I just want to share some of your sort of links with people. So I have it on the screen now for people. This is his channel, Drake on Digital. Like I said, he's huge, almost 40K subscribers. And then would I be right in saying that Twitter is one of the other good places people can find you?
Yes, sir.
Yes. So Rent a Home Fast. I just want to insert that here in the middle of the video. Strongly recommend it. Awesome. But so yeah, thanks for coming on the channel and sharing a bit about yourself. As far as where the market is currently after the events of the past few months, where do you think we are?
So right now, it's tough to say. You can definitely see some signs of it in the market where we're kind of heading, but right now there's several dominoes falling. And in the market, there's still lots of uncertainty. You have SBF, he is starting to deploy capital and he's trying to keep these dominoes falling, trying to protect the sector that he's in. But all in all, the markets are going to rely on the Fed. If the Fed is not going to, or if the Fed is going to keep rising interest rates, and if inflation is going to keep going up, those are going to be concerns, not only for crypto, but for the market as a whole. And that just has to do with the cost of money and the cost of debt. So if these interest rates go up, it costs more money to borrow. And when it costs more money to borrow, these little guys who are going on super thin margins, if they go bust, they also have other companies that expect them to do well and get their payment from them. If they don't get that payment from them and they're depending, and another company is depending on them to make their payment, you then have that domino that falls, which creates this domino and so on, to where you have an event where you have a capitulation to where the baby is thrown out with the bathwater. I feel we haven't had that event yet. Yes, we did have a couple dominoes fall, but we still need to have a massive capitulation event. And if you guys are speculating on altcoins, just be very careful, because these tend to go down 99.99999%, while Bitcoin may go down 80% from where it's at now. The altcoins will get completely and utterly wrecked. However, this can be a really, really good time when you can pick up some altcoins very, very cheap, as long as they're communities that are building and have a strong runway. And I'm sure we'll get later into this video, but be careful when you guys are in the markets right now. And with SBF deploying capital, he now no longer has that capital. So if he overextends himself, or if he steps on too many toes, he can also become a target for shorts. And that could be another big domino that can potentially fall. I'm not saying he's going to fall, just putting that out there. The markets are ruthless and they take no prisoners, unfortunately.
Well put. And I think something people need to recognize, like you said, is that this isn't just going on in crypto, right? You have the Dow Jones down multiple percentage points day after day recently, and you have a lot of tech stocks are down 80%, and those are stocks with real millions of customers and real revenue.
Yep.
Not just ideas like a lot of crypto projects. So when it's a bull market, crypto does better than usual because it's so speculative. And then in a bear market, well, we don't really know what it does because we haven't seen a true equities bear market yet. Since, I mean, really basically since Bitcoin was first tradable, right? We've been in a perpetual bull market. So yeah, I would say I agree on most of those things. And I think that there are certain altcoins that will emerge as having good business models. But it's the tough thing is we'll get to a point, I think, where you get a lot of projects washed out, either because of poor business management or because they were exposed to things that may have been totally, out of their control, right? It could be a good project and they built on a chain that was mismanaged, and then their treasury is in that native gas token, and now their treasury is worth nothing.
Yeah.
And we'll see what happens. Did you hear the news about SBF with Celsius earlier today?
No, I didn't hear
Where
what happened.
apparently he's no longer interested in in trying to bail out Celsius.
Oof, good times.
Good times, right? And that's new. That's within the past few hours. But yeah, people need to be very mindful of how these sorts of contagions can spread throughout the market in unpredictable ways. I mean, I don't think almost no one had 3AC becoming insolvent on their checklist.
Yeah, I remember the memes with Suzu.
I mean, he's a smart guy. It's a shame.
Super smart.
Shame to see what happened. And you know what? And we realize now that a lot of these billionaires and funds actually did believe the things they were saying about having conviction and being in a super cycle and all that.
Yeah, no, that's true.
They really put their money where their mouth was, so to speak. So you said you're focused mostly on Bitcoin, maybe Ethereum to some extent right now.
I do like both Bitcoin and Ethereum. I do have some concerns with Bitcoin in the long term, as in like the sustainability, because most miners depend on the rewards. And if it's going to run out of rewards and everything's going to run on transactions, then you have that issue of, well, if it's digital gold, I don't use that or transact with that a lot. So that's why I like Ethereum a little bit better for that area. But in the time being, Bitcoin has the brand name and most people know that. And obviously that's longer in the future. And of course, there's an easy way to solve that is different company or countries subsidize this and they just take care of the mining fees that way. But right now, if you are wanting exposure to cryptocurrency, Bitcoin and ETH are really the main ones you want to stick with. And if you guys are in stablecoins, just be careful. I would only agree to leave stablecoins as like a liquidity trade, just so you can, if you're wanting to buy something really quick, that would just be your dry powder on the side. Me personally, I think it's better to hold it in cash or other assets like gold, silver, and if you guys are able to, some real estate. This just diversifies your portfolio, and having cash on the sidelines is much better than having a stable coin that we think is stable. I mean, if UST wasn't an example of that, I can't help you. There's a lot of systemic risk you take when you take on a stable coin, because you're technically giving it out to a bank. That bank goes bust, there's nobody you can go after. There's no bailouts, especially in crypto. It's just things to keep in mind.
Yeah, well put. I actually used to get, I don't want to say hate, but a lot of negative comments because I don't do stablecoin farming. And before the UST thing, I vocally posted a few times. I said stablecoin farming to me is like picking up pennies in front of a steamroller, because your upside is completely capped, right? 10, 15, even 20%. That's the most you can get. Your worst situation is UST. It goes to zero.
Yep.
And that's just so to me, the reason I'm in crypto is because I want to get these outsized returns that are impossible to get elsewhere, 2, 3, 20x. But stable coins, there's just no way to do that. I mean, I would say USDC. If I have to hold something, I usually go USDC. But like you said, I mean, there's a reason why, as much as people in crypto dislike regulation, there's a reason why, for example, bank deposits are FDIC insured and there's limits on the reserves that banks have to have. It's because a lot of these things we're seeing with DeFi protocols now and stablecoins happened with banks 100 years ago, and banks went under and people lost their life savings.
Yeah.
Cool. So you're mostly focused on those. Are there any trends or anything that you're watching, whether it's for short or long term?
So right now, I mean, there are some coins that I'm looking at, but it's one of those things like you just have to be careful on how you position yourself. You need to look for teams that are able to build in a bear, and these would have to be ones that have a strong runway, aligned community incentives, product market fit, a strong network effect, a product that people would continue and like to use without having a yield there or being paid to do it. An example, I'm not calling this one like saying, hey, go buy this now, but you and I both would be willing to use MakerDAO. Like if we're super bullish on Bitcoin and ETH, we would use Maker to open up a CDP position so we can get some stable coins and go speculate on other assets. This would be like in a bull or even a bear market if you're trying to lever up. People are still going to use that type of protocol regardless of if you are paying or not. Now, I'm not saying people are going to hold the stable coin, but I'm trying to explain that people would still like to use it as a utility. And stable coins have a really good utility. They're good for having quick liquidity on the side. I would not recommend storing all of your wealth in it because there's a chance that it goes to zero. And B, they are able to have a transfer of wealth that is more stable. Like if you are saying, hey, pay me $20,000 and Bitcoin's $20,000 at this time, and I transact it with you, well, that 10-minute block time, by the time you get it, what if it's worth like 15 grand? You're going to be mad at me. And I'm going to be like, I'm sorry, Bitcoin just tanked when I gave it to you. And then the opposite would be true. If it goes to 25K, I'd be like, give me a refund. So just things to think about.
Yeah, not to mention that for anything business related, usually there's payment terms where you have a gap sometimes of multiple weeks, right?
Yeah.
Between the agreed, the task and the payment for it. Imagine if you had been agreed to be paid in ETH 30 days ago. Not so good. Yeah, I would say that's interesting way to put it as far as protocols that actually have use. And again, I'm not saying the token, but Uniswap is an example where, bull, bear, Uniswap's dominance has been solid.
Yep.
Uniswap's dominance has been solid. And I would say at this point, unless something, maybe some new competitor comes up in the bear market and Uniswap is the Internet Explorer, but right now it's tough to imagine a situation where Uniswap isn't at least worth something.
Yeah, I agree.
Cool. So you mentioned payments a few times. Do you see that as a big area of product market fit for crypto?
I mean, it's huge because it solves a major issue that we have in the real world where either these payment companies are going to have to operate on 0% margins or everything's going to go to crypto. Because all these, if you don't know how a payment gateway works, Visa, MasterCard, Amex, and Discover, they all make their own rates. Like if you're a payment processor on top of them, I wouldn't say Stripe. I would say something like Maverick or North American Bank Card. These are like the big companies that Stripe even uses in order to integrate with them. So Stripe's a payment aggregator. A payment processor, they actually have to use Visa, MasterCard, Amex. They can't change those rates. So what they do to profit on top of that is they just add a little percentage on top of what they charge. So there is a base rate that cannot be changed because that's what it's set in stone. And with crypto, you can literally transact with someone and it's instant for no fees. Like you just pay a gas fee. That's it. Transaction goes through, boom, done. So it solves a problem that's in the real world and it makes it much cheaper. This is what we saw like with the internet and advertising, or for example, with Facebook ads. People started using Facebook ads because Google was too expensive. I mean, of course, people still use Google, and I'm not saying it's going to put them out of business, but what I'm saying is things change and they always go to where there's excess profits. These always lead to competition, which drives down the price. And crypto is solving one of those major issues for that. Now, time will tell. We'll see what happens, which protocol is going to take the largest market share. But there's bones there that need to be, or there's bones there that can be capitalized on. So it has the infrastructure for it.
Very true. And I think a lot of people, if they've never had to transfer money or never had to transfer not even a huge amount, but like 5 figures, they don't realize just how difficult that is to do with the traditional banking system, as opposed to crypto, where it takes like 5 to 10 seconds.
Yeah, it's crazy.
And I always like to say that the payments to me are pretty much ready for prime time. DeFi is probably a couple of years out, and then the metaverse things are, in a full cycle or longer away from being ready for major production.
Yeah, like currently most people in cryptocurrency, especially the ones watching both of our channels, they may not understand how the payment gateway is, but like the traditional layout is from merchant to from consumer to merchant. How this transaction would work is I give you the credit card payment, swipe, whatever. And behind the scenes, like with the credit card, they're actually interacting with that bank that goes to the payment aggregator, which then goes to their bank. And then from that bank, it goes out to your bank. So this whole process is taking like 7 to 10 days. And even then, when you get that payment, there's a chance for that customer. Let's say, for example, they were a fraudulent customer and they were just stealing credit cards and just trying to get a bunch of stuff for free. They can now charge it back within the next 30 to 90 days. And you may have sent out that $1,000 product to them and they're like, yes, great, I got this product. Dispute, chargeback. So they get their money back, they get the product for free. And as a merchant, you're still waiting, I don't know, 10 to 14 days to actually get your money. Yes, they have ones that will cough up some money just to help the merchants out within like 3 days, but they'll charge you fees to do that. And then on top of that, you're paying those transaction fees every time the customer swipes the card. And that still doesn't resolve the issue of the chargeback, because that customer can charge it back within 60 to 90 days and you lose all your money from that. So if you're operating on a 1 to 2% margin, your company is going to go bust. This is also one of the reasons that we see prices rising in like Walmart, Target, Publix. This is because people are, it's not because people are doing this, but refunds and returns and chargebacks, those are a major cost of businesses. They even have companies that develop around this for chargeback mitigation services. It's crazy, but millions are lost in chargebacks. I could probably say billions, actually.
I just learned something new. Very interesting.
It's really corrupt, man. It's super corrupt.
Yeah, no, and Walmart loves those low prices. Fun fact, I don't think I've ever mentioned this on the channel. I used to work in sales finance for a major food company, and I ran this briefly, sort of ran the pricing for their Walmart account. So I was down in Bentonville, Arkansas, and they, low prices that's basically real retailers like that. Their bread and butter is just, they want to have the lowest prices, and anything that cuts into that is considered a major cost of business to them.
That's sweet.
Cool. But before we get too off track, because I know you've got limited time, so I would say you are known, among other things, for your extremely strong fundamental analysis. I've seen how you go into Discords and ask teams questions and things. Can you share a little bit with people about what you look for in projects?
Sure. So for projects in general, you have to look for a couple of things, but in general, look for teams that are still building and that have a good runway. You also want to look for ones that, like I mentioned earlier, have utility, not ones that you earn 1,000% just for using the protocol. It's not sustainable. I hate to break it to you, but it's not. You want a protocol or a project that has utility and it has a product market fit. Like, I would want to use this regardless of if they're paying me or not. You also want to look for ones that are multi-chain. These projects usually have less risk because the success is not tied to the success of the chain. So an example of this would be like Spirit Swap on Phantom. If Phantom is not successful, well, then Spirit Swap cannot be successful. Or let's say, for example, some protocols on Harmony. Harmony with this hack, time will tell. We'll see what happens. I'm sure. Well, actually, Luna is a better example. The projects that were on Luna that had everything dependent on them, some of those projects are just gone. They're bust. They lost all their treasury. They lost all their funds. They either have to figure out how to make money another way, or if they do have some funds, restart and go on another chain. Now, if they're a multi-chain, well, that chain just goes down, whatever. I still have funds and I still have assets and I still have functionality on other chains. So it's fine. Lastly, the success of the successful projects that you have today may not be the successes of tomorrow, or at least the next bull market. This mainly has to do around incentives as well. And the reason why this has to do around incentives is if my protocol has been emitting tokens for the past year or 2 years, I have less money to give out to attract users. So that is the first factor. And the second is, now that I emitted a bunch of tokens, my market cap is now larger. So being that I have a larger market cap, it's also harder to move my market share. So those are just 4 things I like to keep in mind with those projects. And until there is more clarity, I really advise, well, actually, no, there's no financial advice. Save some bullets. Just,
you're saving bullets yourself, right? That's what you're
doing. Always save
Yeah.
bullets. Save some bullets, man.
Mm-hmm. That's true, but I think those are good things for people to keep in mind, because there could also be people who are holding projects saying someday it's going to come back the next bull market. And even if we can be as certain as one can be that crypto in some form will come back, you don't know that those specific projects will come back. I mean, there's projects just from spring of 2021 that didn't come back in fall 2021, let alone what's going to come back in 2023 or 24, whenever the market recovers. And I think what you said about being tied to one chain is interesting. I'm curious to hear your perspective on this, because on the one hand, it's good when they're not tied to one chain. And I think a project like the Curve is maybe a good example of that. But how do you balance that with projects that, to me, it's usually a red flag if a project has struggled on the first chain it's on, and before they fix that, they launch on a second chain?
Yeah,
To me, that's
so
usually a red flag.
yeah, so I agree that if they are struggling just to capitalize on one chain, that's going to be an issue. But if you have a let's take for example stablecoins. How valuable is a stablecoin when it's only on, let's say for example, Harmony? Let's say I have a stablecoin and it's only on Harmony. Well, the problem is the only utility for me to use that stablecoin is on Harmony. However, if I'm on Phantom, if I'm on Avalanche, if I'm on Ethereum, if I'm on Binance Smart Chain, I can't use your stablecoin. It's on the other chain. So there's less market share and less people that can use that project or use that stablecoin. However, if it's on multiple chains, now there's additional utilities that can be added. These can be bridging. This could be lower bridging fees. This could be, what is that protocol? Drawing a blank. Stargate? Yeah, Stargate.
Stargate
You
in
can
layer zero.
capitalize with something like Stargate, is now you can have these cross-chain swaps without, or that are seamless, and you don't have to sit and wait. It's just boom, done. But if you only have it on one chain, it's only as useful as that chain. And if that chain goes down, or if there's a hack like over on Harmony, it's basically useless until something happens. And anyone bridging into Harmony is going to have that negative slippage. Well, of course, they'll get more stables, but the stables they have on that chain are useless because all the other assets are priced higher. So sitting and going on one chain, it's good and all for starting out, but it's, you need to go onto multiple chains, and you need to have a multi-chain project that's able to do that. Because typically with these tokens, if they're married to one chain and that chain is unsuccessful and is gone forever, their project is gone. So Bitcoin and Ethereum can be screaming and doing amazing, but if that chain they're on is not screaming, they aren't going to do amazing. There's going to be no adoption over there because there is nobody over there. So if nobody's on that chain, there's nobody to buy their coin. So just some food for thought.
And that's good. And I think something people, at least people who are new to the market, new being, say, 1 year or less, should realize is that the layer ones that return in the next cycle won't necessarily be the same layer ones that did well this one. Some of them could be, right? I wouldn't be surprised if AVAX or Solana or even Near was still around, Phantom maybe. But keep in mind the chains from 2017, Neo, EOS. I know a guy in that sad story. He DCA'd into Neo for multiple years, and it never fully recovered.
And that has to do with those incentives.
Yeah, and
If a
he,
chain is
I
paying
mean,
me 100% and this chain's paying me nothing, I'm going to the 100%. And I'm going to farm the mess out of it.
yeah, and the thing is, it's not like it didn't recover somewhat, but it was nowhere near what the newer coins like Solana did.
Yeah.
I mean, and there's coins from 20. I mean, we can go into things from that pumped in first half of 2021. I mean, even BNB, right? It didn't
Yeah,
have the same returns in the second half of the year that it did in the first.
that's true.
Cool. Well, I think that info on fundamental analysis is interesting. Are there any emerging trends that you find compelling right now, even if you're not invested in them?
Right now, it is kind of hard to say. But I would say some potential trends would be like under collateralized loans. This would be like a credit-based system somehow on the blockchain. I don't know. Time will tell. We'll see how that pans out. Obviously, stablecoins, that still is an issue that needs to be solved, and there's always going to be demand for that. I mean, this can even go into Forex markets. Like, that would be crazy. Just have Forex on chain instead of going through these different brokerages and different market operations. You could just have it on chain and it's instant, and it trades. Of course, Forex trades 24/7, but still having it on a platform that's permissionless and is able to be settled instantly is just a game changer for that. Maybe like a merge with DeFi and NFTs, and then finally maybe like cross-chain protocols and interoperability. These would be kind of interesting developments that I see haven't really had a major market adoption, but that should get more adoption. And of course, metaverse, of course.
Metaverse, whatever that means, right? I mean, to me, that is interesting when you combine it with maybe augmented or virtual reality, but otherwise, it's basically like a junky video game from 15 years ago.
Yeah.
No, that is really interesting. Some of the stuff you pointed out, I think people like the Forex trading is sort of like payments, where people who have never had to try it before don't realize quite how clunky it can be right now, especially for people with Forex. If they're trading, trying to send a small amount to a relative in another country, it can be kind of a hassle.
Dude, it's the worst. Like for example, like Western Unions, you have limits on the amount you can send. I think it's not, yeah, it's per month and it's per year. And then on top of that, you also have limits on what you can send. So like if you say in there like they're a family member or a friend 1 month, and the next month it's like, hey, it's a gift, they're like, wait, why are you doing this? And they'll call you and have like a 30-minute conversation, make sure you're not like money laundering. It's like, dude, I'm trying to pay someone and support someone. It's my money. I could do what I want with it. It's crazy.
Yeah, and crypto makes it so it's really your money and you can do what you want.
Yeah.
As far as the under collateralized loans, are you familiar with the soulbound token idea at all?
Yeah. Soulbounds are going to be saucy, man.
They're going to be saucy. And I think one of the use cases that Vitalik identified in his essay about them was under collateralized loans, because you could have reputation tied to someone's wallet, where you could say this person has a history of paying back loans, or they've done these other things that might correlate with being reputable.
Yeah.
Which is interesting. I mean, I guess you could imagine a lot of situations where, for example, if someone was a multi-sig on different projects or had somehow been affiliated with different things in the past, that would make them better for credit. I think we're going to get into all those sorts of things eventually.
Yeah, no, they would definitely be interesting, because then, yeah, I know some people are like, oh, they'll just change a wallet. Well, yeah, if they change a wallet, now you have a wallet that has no history. So they would be unable to get a under collateralized loan until they earn that creditability. So it's definitely going to be interesting how soulbounds work.
Absolutely agree. So final question. Seems like we're in a bear market. We don't know how long we'll be in one for. How do you think that people can make the most of this time?
So I would say in this type of situation, make your plan. Find the teams that are building, that have a good runway. The winners of today, like we were just talking about on this conversation, may not be the winners of tomorrow. So allocate accordingly, and it's important to always save some bullets for that type of situation. Preferably look for ones that are multi-chain. We will have a multi-chain future, but of course, time's going to tell on whether AVAX is going to win, Solana is going to win, or even some unknown layer one chains we have no idea about until time comes. And then we'll be like, oh, okay, that's going to be the winner. Nobody knows. When you're looking for different apps, look for ones that are best in class. Right now is not really the best time to scrape from the bottom of the barrel. The best in class are going to be selling for super cheap. And just because you see prices today doesn't mean they can't go down anymore. In fact, they probably will. And like I mentioned, we're waiting on the Fed to actually stop rising rates. And this has to do with inflation. If inflation is still going to keep going up, why in the world is the Fed going to lower the rates? Of course, the economy may crash, whatever, but they need to control inflation. If people can't buy food, they aren't going to go buy your next 100x gym. So something to keep in mind. If you're
Sorry, I was
making,
going to say, if they can't buy food, they're not going to buy your food coin.
Yeah. If they can't buy food, they're not going to buy your food coin. Well said. I like that, Patrick. That's a good quote. So if you're making different buys out there, look for ones that you know will make it, and nobody knows. So just govern yourself accordingly. Bitcoin and ETH are the ones that have stood the test of time, but as always, time will tell. We'll see what happens. And the communities that are still building and chugging along, if you want to, you can throw some bullets at it, but position accordingly. If you're making buys in these smaller altcoins, you don't have to throw 10% of your portfolio at it. In fact, these can be less than 1%. And in the next bull market, when they get adoption, they will grow to 10 to 20% of the portfolio. And one important thing to remember when that happens, don't forget to rebalance when this happens, because if you don't, the market will do it for you. Always, well, lastly, always save some bullets. This is always important to do.
Awesome. Love it. Thanks again for coming on the show. I showed it a bit earlier, but in your words, what are the best places for people to keep in touch with your work?
YouTube, Twitter. I also have a link tree in the Twitter. You guys can check out some of the Medium articles I make, as well as the Substack articles. So you guys can check out that stuff there.
Great. Thanks so much for coming on, Drake. It's been an honor.
Dude, it's an honor to be here. I appreciate you having me on.